It's up close to around 10%. Ajay Vora, head of Equities at Nuvama Asset Management, joins us on the show. Hi, Ajay. Good afternoon. Good to see you win. You've got a tinge of blue as well, so we're all on the same side and all set for Sunday. But before Sunday, we need to get through the last 30 minutes of trade today. How are you feeling about the markets? We have discussed this in the past, that Nifty is relatively cheaper now. You have the dollar index that's cooled off as well, and crude oil prices staying at very, very good levels is a positive for the Indian markets. So what do you think? How constructive are you on the markets right now?
Yeah, hi Nigel, and good afternoon, and thanks for having me on the show. So I think that we are pretty much excited at this point of time after seeing 5 months of almost negative returns for the benchmark index. And I think if we go back in October 24, since when this whole correction had started, you'll see that at that point of time, two major factors played out for this whole drawdown for the markets. One was obviously our local slowdown and earnings downgrade, which had started in October, and it lasted almost, I would say, for 6 months, and we are down 10-12% in terms of earnings. And at the same time, there was a lot of optimism in US, right? And therefore, dollar had appreciated by almost, I would say, 10% over a period of 3 to 4 months. And historically, we have seen that whenever DXY index appreciates, it results in sharp correction in emerging markets, and that is what played out for India as well. But now at this point of time, I think that considering DXY has also reversed from the levels of 110, 111, considering now there is a lot of uncertainty in US, considering the, I would say, tariff announcements. My sense is that our bottom is very much in place for us, and I think over next 3 to 4 months we can see a very sharp rally for our markets. Our domestic factors will also play out big time in terms of what the regulators have been doing. Almost $40-50 billion of liquidity has been injected, and I think even the budget was pretty positive in terms of consumption. So I think everything put together, we have seen the worst, at least in the medium term, and I think we are due for a very sharp rally.
All right, so you are in the camp that the worst is behind us right now from all perspectives, and from here on we will see a sharp rally. Just a two-part question. In terms of earnings, what are your expectations over the next couple of quarters? What kind of earnings growth can we see from the weakness that we've seen over the last 2 quarters itself? And where does the Nifty go to from current levels? I mean, do you have a target here when you say sharp rally? Do we go back to test the previous highs?
So Mangalam, I think that the way we should see earnings over next few quarters is that March is anyways not likely to be that great. But from June quarter onwards, we will definitely see a decent uptick led by 2 major sectors, I would think. One is banking, considering, as I said, the liquidity has been infused, and also a lot of pockets on the corporate credit have started picking up. So both put together, I think, banking can be one sector which will deliver above expectation numbers from June quarter. And secondly, if you recollect, last entire year, a large part of the downgrades was led by commodity sector. My sense is that, steel prices have moved higher, even aluminum. So the entire base metal pack and the ferrous, has seen a decent uptick. So that will again lead to some sort of earnings upgrade. So over next, I would say 3 quarters or so, and maybe for the entire year of FY26, we are building in anywhere between 10 to 12% earnings growth. So earlier, if you recollect, the expectation was closer to 1,300 rupees EPS for FY26. My sense is that that number will be closer to 1,200 now. And based on 1,200, I think that even if you give a fair multiple of 20 times, once we are back to that double-digit growth, we should be anywhere around 23.5, 24,000 over next, I would say, 6 months or so, because markets are forward-looking. And then once we start looking at FY27, that number is looking more like 1,350, 1,400. So I think the stage is set for back to double-digit earnings growth, and that is how the compounding will take place over next 18 to 24 months.
5 to 6% rally once on the Nifty is likely from current levels as well. 23.5, 24,000 implies anywhere between 5 to 8%. Is that your estimate?
Yeah, so over next 6 months, but I'm saying as a long-term investor, Once you start looking at FY27, maybe 6 months down the line, we are looking at around 28,000 over next 12 to 18 months.
Ajay, in the last few days, suddenly there was talk of that grizzly bear returning. I don't think you're in that camp. You're sounding quite optimistic on, the earnings from year on. And that's an important point as well that you briefly touched upon, that Q4 numbers may not be that great, but the commentary will be good because these positive measures by the Government of India, by the RBI will gradually start showing up from Q1 of the next fiscal year. And that will be on a lower base. So earnings growth will start coming back from the next quarter. Got that, Ajay. And, my colleague Mangalam in the studio is quite excited about the game. Mangalam, United Breweries, sad one, but it's at the high point of the day. Just take a look at that stock. Zooming away as we speak. The stock was in the red when we started off the show. That's moved to the high point of the day. I believe that you will be looking around. Ajay, how are you feeling about these defense stocks? They went on the offense, then they cooled off. And boy, oh boy, people were, they used to join in the channels and say that if the stocks cool off a little bit, they didn't cool off. Some of them became half. What's your take, on these defense stocks?
So I think, Nigel, see, defense is definitely a very strong structural story for next, I would say, 5 to 7 years. And at some point of time, they were definitely very expensive. I would say that there are pockets which has become reasonable now. And therefore, one should definitely look at it for a long-term investor. It clearly makes sense to enter in at anywhere between, I would say, 20 to 25 PE with a decent, sustainable growth over next 3 to 5 years. So I think it is one theme which investors should definitely participate for next 3 to 5 years.
All right, Ajay, thank you so much for joining in. The key takeaways for us, double-digit earnings growth not too far away. And at the same time, we can't rule out the Nifty moving all the way up to 23.5 to